Hello and welcome to July 29. Alpha's KR 63%. That was a 20% jump from yesterday. But before we go there, let's look at the SPY. We have 18% and we have moved it back into positive territory with only a 0.9. So there is the slide that shows there, right? The stochastic strategy is a 0.9 versus the SPY's 18%. But we still have 5 months to go to prove or disprove. Does it blend? Does it work? Okay, with that out of the way, let's go on now to the charts. There is KR at 63%. It was 43 yesterday, so it was a nice big jump here. And there's the Elliot Waves that I drew in earlier. And what do I anticipate? I figured that we're going to have some resistance here around the 45.5 zone. So I'm going to say that the Elliott wave might just break out a little bit past that zone, and then we'll have another retracement in here, testing this level here, and then up that way. All right, so I drew my lines in. You guys can mark this as, excuse me, mark this video for July 29. Go into August and come back and look at the July 29 slide and see if and compare the two. Compare where we are at today on July 29th and where it might be on August 15th. All right. That said, 263, 60%, 269 to the good against 2130. So that is the objective of rocks become pebbles, pebbles become profit, and profit does payback. Moving on now to PG. PG is now at 50%. And also note that we are past our EP entries. We are the EMA is starting to a little bit of a flat line here. We do have a swing low here, so we'll be looking at maybe some support right in this zone. If it comes down that far, the stochastics and RSI are still in their sweet spot. Right there, they're right in between the two zones, and that is good. That means it can go either way, and the trend is uptrend, so this will support an uptrend situation. 50% for PG, and that is a 245 gain against a nut of 2716. All right, going on now to Monster, and Monster is we do have all the positions have gone to EP stops. We are also tomorrow. This is the last day of this strategy of this Elvis shift for July. In August, we are going to have another Elvis shift, and that Elvis shift is going to be this. We're going to move to that first ratio. So therefore, like Monster is a good example. It's 36% head in right here. If it comes back and hits here, it'll take us out of the trade, contribute a little bit to the buying power, and add a win to the winners column, and then run the scanner again. Because what's great about the stochastic scanner is that it will pick up a trade in mid-cycle. It'll pick up a trade in this cycle. So it's not like some other strategies. There's a one called bottom feeder. And bottom feeder looks for a real deep low of price action, and then once it takes off, it's gone. But that usually is reserved for open market scanning for bottom feeders. You really can't use, well, you could use a watch list, but you could be waiting a long time for the price to retreat deep enough for a bottom theory to be triggered and then get into it and make it run. Okay, that takes us to gold. Gold had, like I said yesterday, gold had a nice recovery, and it seems to be going very well. We were down here, down at 1%, then 3%, and then look, we have a nice jump here at 28% from the 3% that we were yesterday. Very cool gold. That takes us now to RTX Raytheon, and now Raytheon has included this first ratio. Now, another thing too about that Elvis shift, when a rule is changed in the Elvis shift, that rule is immediately applied. It does not apply only to the new arrivals, but it applies to anybody who is in play. So some of these who already have broken past their first ratio, they're going to get marked up to their first ratio. Yeah, the first ratio is going to be once they clear that first ratio, the win ratio. We are going to go ahead and do that. And if we get, like I said earlier, if it retreats, we get out with a little bit of buying power, add to the buying power, and just keep chipping away at the O. As I said earlier, rocks become pebbles, pebbles become profit, and profit does pay back. Okay, that takes us now to CVS, and CVS is also a little bit in profit territory, a little bit flatlining right in here. Still is in the it's still in a potential zone, so we'll be going there, and it is an EP stop, and again, come Monday. End of day, well, actually, end of day Friday tomorrow because we set up trades for Monday. Anybody above their first ratio who has cleared their first ratio very distinctly, then they are going to start getting that first ratio. CVS will probably not be one of them unless it closes up here above the first ratio on Monday. Okay, that takes us to our last positive, and that's DBA. Now, DBA is the ETF for agriculture, and the entry was here. We do have an EP stop, 1870, and the first ratio is up here at 1987, and they got high as in 1939. Then have a small retrace right there. All right, well, that takes care of that. TLR was very hot in the news today, so I'm going to make a special video, and we'll call that the TLRY review. Also notice too that Yelp has gained 12 percentage points off its deep 40 minus 46% from a couple of weeks ago. Now it's slowly moving up. And remember, these two trades, Yelp and AT&T, are DTEs without stops. Everybody here is going to be employing stops. These two will not be employing stops, and they'll be used as a benchmark against the theory, the DTE theory. And again, does it work or not? Well, with that said, let's go ahead and run the scanner for today. We don't have any money left, and I'm going to talk about TLRY and the separate in the next video. So let's go ahead and run a scanner and see what today's scanner is going to produce for us. Remember, yesterday we had 16 candidates. If you go back to yesterday's video and freeze it, and then go and look at due diligence and look at the list from yesterday. So here we are, stochastic uptrend, all optionable between $10 to $100 with 2 million shares, and run the scanner. We have potential of 867 matches out of 3,200. So only just over a quarter. And there we are. We have two. And this is DWT. And DWT is the ETF for the Taiwan. It's for Taiwan. So we'll go ahead and right click, come down here to the send to the red link, and then zoom in, and there it is. There is your ETW. Now, does ETW have enough qualifications for an option? Let's go ahead and drop in the 3-to-1 ratio ruler. There's your swing low. There's your top. So it's the interest is somewhere around $64, and that would probably round up, in my book, around up to $64.10, and the low here would be $63.65. Okay, now we go to the next criteria. Remember, just because you got the good scan doesn't mean it's a good options trade. There's a big difference. That's good for stocks, but not options. Okay, here at the option side, and remember, you are looking at the call side of the option ticket, and we don't have a lot of open interest. So right there, it's disqualifying. So what we can do for qualifying it, we can come here and open up the filter, turn off the 90-day restriction, and then go to what they call the current month, and then look to see. And then again, it doesn't have a lot of open interest. We go to all, give it one more shot, and again, it does not have enough open interest. So it looks like EWT is going to get disqualified. Oh, wait a minute. We found something right here. There's 6, 7. We got it. It qualified. There's the qualifier. You need to have 5,000 open interest between calls and puts in the purchase month. And I did to the front month is 7,000. So now we'll go to put on our filter back on again. And now we can go back to December 17. And now we go back to the par zone, which is about 8.4 on each side. 40 cents, that's out. It's over 10%. 50 cents, over 10%. Disqualified, disqualified. Going up on the high side, 40 cents, barely qualified. I really don't like those. Write it on the 10 end percentage. It's not good. 60 cents and so right here, this is the only one that qualifies. 50 cents right there, and that's like running almost 8% spread. So our choice would probably be here. We could go one more step, and that's called diamond in the rough. Diamond in the rough, you're looking at potentials that will have maybe a tighter. Right now, you're looking here. This is 50 cents. You want something less than 50 cents and with under the 10% rule. And nothing here. That's 60. That's out. That's 60. That's out. That's again, that's 50. And if so, this is again the same situation. It's just barely borderline to the 10%, and then the 60 cents. So the option choice would be for those who had the money in the budget to get one contract, which will cost you about $530 in addition to the commission, which is not very much anymore. Commission fees are now $1.35 for a round trip trade here at Thinkorswim, and then that would be our choice right there. So there we are. We have our entry point, we have our option selection, we have our qualifier, and we are done for today. And I thank you very much for stopping by and checking out. And next video up is TLRY, and we'll see you then. Bye bye.